the context is actually a situation in which the global economy has been doing better than people anticipated. We haven't seen the moves into recession that people were worrying about as interest rates rose last year, and there have been signs that activity is stabilising, indeed picking up in the early part of this year. So what central banks are really going to be asking now is, whilst headline inflation has come down a lot from its peak, where's underlying inflation going? Is it going to get down to the levels consistent with their targets in the medium term? And they're going to be really looking particularly at what's happening to the labour market and to wage inflation as a guide to whether they've really got inflation licked.
Let's look at a few of the central bank meetings this week. Are we likely to see the end of negative interest rate policy in Japan?
I don't think we're going to see that this week, but the Japanese economy has been moving in the right direction, and I think we may well see some further sort of indications that the Bank of Japan is preparing for the end of negative interest rates, but that probably won't happen until April.
Also tomorrow is Australia's own RBA, which hasn't been prepared to rule out another rate hike in this cycle. Can you see a scenario where it may raise rates again? Well,
just like the world economy has been doing better than expected, the Australian economy has as well. So I think you certainly can't rule out circumstances in which, if growth suddenly were to pick up much more strongly than is generally anticipated, that the RBA wouldn't need to think about that. But I don't think that's the most likely outcome. I think we're now in a situation where they're going to want to wait and see that labour market cooling as we're anticipating elsewhere in the world as well, and then maybe towards the end of the year start thinking about moving interest rates down.
OK, so you're expecting a pause from the RBA tomorrow?
We are, yes.
Is that a dovish pause? Do you expect to see commentary, the tone from the RBA change?
No, I think it's going to be a sort of cautious pause, saying that they're monitoring all the data coming out from the economy, that they want to be sure that wage inflation and underlying inflation in particular are moving in a continuing lower direction, and that's going to be sustained. So it's going to be we're watching and seeing message, I think.
The US is the week's most highly anticipated meeting. Is the Fed in an increasingly difficult place given last week's hotter than expected inflation reading?
Well, I think that the Fed, just like all central banks, is in a pretty unusual place in an interest rate cycle. Normally we're talking about interest rates coming down because economies are moving into recession. That's not what we're seeing. So they're trying to really balance to what extent is growth continuing at a decent pace, and to what extent is underlying inflationary pressures easing in the way that they hope. I think they're optimistic that things are moving in the right direction, which will allow them to ease policy later in the year. But again, they're going to want to be stressing that they're following the data, they're going to be informed by the data, and they're not rushing into a decision.
That means you expect another pause this week?
Indeed, yes.
What will you be looking for in the Fed's dot plot guidance? And could markets be in for a bit of a wake-up call?
Well, I think that what we'll be looking to see really is the pace with which Fed officials are expecting to see interest rates coming down, how far away they think we are from a neutral rate, and how fast they think is plausible that we'll move to that situation. I don't think we're likely to see any big surprises. I think that, it is going to be a Fed policy that's very governed by how the data evolve over the coming months, and they're going to want to be, underlining that's really what they're watching, and they're not trying to move markets in the near term, until that data comes through.
Does that mean that you too, as markets are pricing in, see 3 interest rate cuts this year?
Yeah, so the expectation of 3 cuts has been where we've been at Oxford Economics for quite some time. I think that we see markets moving from being more hopeful about bigger rate cuts to in line with our view. So I think that now they're much more realistic about the pace of rates dropping.
Is a soft landing in the US assured?
Nothing's assured given the risks that there are in the global economy. As I say, we've been surprised how well economies have held up in the face of higher interest rates, but there's plenty of things still that could go wrong out there, particularly geopolitically. So yeah, things are moving in the right direction, things look hopeful, but there's plenty of risk for sure.
The UK remains in recession. Is there a reason, in your view, why the Bank of England would cut rates this week?
Again, I think that the Bank of England is much more focused on making sure that inflation is coming down in a sustained way than it's concerned about weakness in the economy. The UK's got probably a bigger underlying inflation challenge than some of the other big economies. Wage inflation still relatively high. So I think the bank's going to be looking at a situation now where workers are making significant real wage gains because headline inflation has come down so much. So they'll be less worried about needing to support economic growth, much more worried about making sure they're going to hit their inflation target, given how their credibility has been hit by the problems over the last couple of years.
And so what does this all add up to for opportunities and risks for investors in the near to medium term?
Well, I think in terms of this coming week, this is probably a week of no big surprises. So I think that it's really going to be a matter of following how the economic data turn out over the coming months, and really to what extent we're seeing underlying inflation continue to trend down, and the extent to which, as real wages are strengthening, that generates a significant bounce up in economic growth. I'm not too hopeful that it will, but I think that investors are going to be looking for, where is the growth outlook strongest in the world?
Adrian Cooper, thank you.
You're welcome.